The rise of real-world asset, RWA, tokenization in 2025. A new frontier in crypto. In 2025, one of the most dynamic and fast-growing sectors within the cryptocurrency space is the tokenization of real-world assets, RWA. This trend has gained immense traction, particularly as traditional financial institutions and blockchain startups work together to bridge the gap between decentralized technologies and tangible, off-chain assets. RWA tokenization refers to the process of converting ownership rights to real-world assets like real estate, commodities, bonds, or art into digital tokens on a blockchain. These tokens can then be traded, fractionalized, and used as collateral, much like other digital assets. With governments beginning to formalize legal frameworks and compliance mechanisms for on-chain representation of off-chain value, tokenized RWAs have moved from a niche innovation to a core pillar of decentralized finance, DeFi, in 2025. This shift is propelled by several key drivers. First, the global appetite for yield-bearing digital assets has exploded. As DeFi protocols look for more stable and reliable yield sources, tokenized treasury bills, carbon credits, and corporate bonds have entered the spotlight. Second, the increasing maturity of Layer 2 solutions, particularly Ethereum-based ZK rollups and optimistic rollups, has drastically reduced gas fees and increased throughput, making it more feasible to issue and trade asset-backed tokens at scale. Third, the adoption of on-chain identity and compliance systems, such as zero-knowledge KYC solutions, has enabled institutional players to enter the tokenized asset market without violating AML or securities regulations. These systems preserve user privacy while satisfying regulatory demands. The convergence of these trends in 2025 has created a robust environment for RWA tokenization to flourish. The practical implications of RWA tokenization are already visible in multiple sectors. Real estate, traditionally one of the most illiquid asset classes, is undergoing a digital transformation. Tokenized property shares allow users to invest in fractional ownership of high-end apartments, commercial real estate, and even land in developing nations. These tokens can be traded on decentralized platforms, staked for yield, or used as collateral for crypto loans. The art world is also undergoing a similar evolution. Blue-chip artworks are being tokenized and sold in fractional units, giving small investors exposure to assets previously reserved for the ultra-wealthy. Meanwhile, institutional-grade tokenization platforms now offer sovereign bonds and carbon credit tokens with verified real-world backing and smart contract-based payouts. These innovations open doors for decentralized savings accounts, ESG-focused DeFi, and inflation-resistant investment portfolios for users across the globe. Despite the enthusiasm, challenges remain. Legal standardization across jurisdictions continues to be a hurdle. While countries like Switzerland, Singapore, and the UAE have made significant progress in defining the legal status of tokenized assets, other major markets like the US and EU are still playing catch-up. Interoperability between blockchains is another friction point. Although projects like Polkadot, Cosmos, and Chainlink's Cross-Chain Interoperability Protocol, CCIP, are actively working on these solutions, seamless liquidity and data transfer between chains still face bottlenecks. Security remains paramount. Smart contract vulnerabilities, oracle manipulation, and custody risks all threaten the long-term credibility of RWA markets. However, with the growing attention from regulators, increased adoption of decentralized identity systems, and the emergence of insurance protocols for asset-backed tokens, the sector is poised to overcome many of these obstacles. The trajectory of RWA tokenization in 2025 signals a broader evolution in how humans perceive ownership, investment, and value transfer. The shift from physical to digital representations of wealth is reshaping not just financial markets, but cultural and social norms around investing. The democratization of asset access, once just a slogan, is now a tangible reality. Crypto wallets are transforming into personalized investment banks, capable of holding not just volatile meme tokens, but regulated, real-world backed instruments that generate real yield. As blockchain continues to integrate deeper into traditional finance and asset management, RWA tokenization is likely to stand as one of the defining innovations of this era, turning blockchain from a speculative tool into a foundational pillar of the global financial system.